So I have sold Keynes Technology, all of my shares for a 17.76% gain. So let's try to understand why did I sell this stock today. Okay, so today is 23rd of December as I record this video. This video might get published on the channel late, but that is not the point. The point is I want you to understand what is my thought process when I am buying, what is my thought process when I am selling. Okay. I want you to understand the factors that I am looking for. So, what do I look for before I buy or before I sell? I do four kinds of analysis as usual: comparative analysis, technical analysis, fundamental analysis, and market analysis. Okay. So, let's do that. So, I have opened the Keynes technology page here. So, if you see, click on consolidated. See, price trend 92, fantastic. Buyer rating A, fantastic. Group rank A, 8, fantastic. Super fantastic. So, comparatively, the stock is very strong. Fundamentally, if you see 70% growth in EPS, more than 25% growth in sales, very good. Annual EPS rising for 3 consecutive years, there is positive growth. In fact, there is 50% growth in the latest year. So fundamentally strong, comparatively strong. Okay, margins, if you see, what are the margins? Margins are at an all-time high. Okay, comparatively strong, fundamentally strong. What about technicals? Well, in technicals, we look at the base before we are buying, but at the time of selling, what do you look for? You have to look at the chart. Okay, you have to look at the chart. You have to look at price. You have to look at volume. Okay, now technically, I don't see any problem. See, it continues to remain above the 8-day exponential. It continues to remain above this 21-day exponential. This is a positional trade, so it continues to remain above the 50-day. So technically, I don't see any problem. I don't see a falling window on this chart like we saw, I think, in Dixon. No, Dixon, there was no falling window. Dixon, there was a rising window, but that rising window was broken. Okay. That is something which I don't see on this chart. So this chart looks clean, but still I sold. So just to summarize what I discussed in the previous video that I made on this stock while buying, these two yellow lines are my buying prices, sorry, buying range. These two yellow lines is my buying range. There is a green line here, okay, 6108.40. That is my buying price. This pink line, 7193.40, that is my selling price. So 6108 is the price at which I bought the stock. 7193 is the price at which I sold the stock. That's a 17.76% gain. The blue line is my first mental stop loss. The red line is my 8% hard stop loss, 8% below the green line. So these are the lines. Okay. I will remove the short term moving averages. Okay. Coming back to our analysis, comparatively, stock is excellent. Fundamentally, nothing changes overnight. Fundamentally, it is very strong. Technically, strong. I don't see any major weakness. Then why did I sell the stock? What was the reason? If everything looks fine, what's the reason to sell the stock today? Okay. The reason is market analysis. Okay. If you go to Nifty, see, first of all, let's understand that the market is in a rally attempt. Now, as I discussed in yesterday's video, the rally attempt fails and index goes back into correction if it undercuts the most recent low. Now, if you check Nifty, okay, the recent low is here. So if today, if the stock were to undercut this low, then Market Smith will switch the market status from rally attempt to confirmed downtrend. And in a confirmed downtrend, as we know, we are supposed to raise cash. We are not supposed to be invested in the market. At least 50 to 75% of our portfolio should be in cash. Remaining could be exposed. But I don't even want to take that much risk. Now have a look at this chart of Nifty. There is a falling window in the Nifty which was completed on 19th of December. Falling window itself is a big problem. The stage 2 status of the Nifty has gone. So blue has gone below the green. Okay. Next, the price has broken the 200-day simple moving average. Okay. So the price has closed below the 50-day, the 150-day, and the 200-day simple moving average on the index, the price is very close to undercutting the low. Anything can happen during the day. The price tried to attempt to close above the falling window. The Nifty attempted to close the falling window, but it failed on Friday, which is 20th of December. So, given all of these conditions, plus there is a lot of overhead supply from here till here, also there is another falling window here. So, if there are two falling windows inside the base of the Nifty itself, okay, if you look at this base, there are two falling windows. So, for the Nifty to come back to its old highs, it will have to close two falling windows. One is here, one is here. That is going to take a lot of buying effort from the institutions, which doesn't seem like coming. So I decided, okay, maybe Keynes technology could form another base here. So let me take a step back. Let me sit on the fence. The same analysis that I discussed yesterday in Dixon applies to Keynes technology. I want to book my gains before the stock breaks. Okay. Here itself, you saw the stock breaking a little bit. On this day, see, although it was a high volume day, very high volume, almost 300, 400% above average daily volume. But look at the closing. It was a high volume week closing day. So if I convert this to a bar chart, have a look at this closing. Now you understand. So high volume week closing, that indicates that as the stock tries to move up, there is supply. But by no means this stock is technically weak. It is showing a lot of strength. Okay. So that's the reason why market conditions. Okay. If the stock continues to remain down for say 1 or 2 weeks, it might create another 10 candle base and I might get an opportunity to enter again. If the stock runs away from me, no problem, no regrets. I booked a double digit return in roughly 2 to 3 weeks. I am fine with that. Next time it creates a base, I might reconsider the stock because currently the stock is in base stage 2. Now imagine if the market were in a confirmed uptrend. Would I have sold the stock? Probably not, because when the market is in a confirmed uptrend, you're coming out of base stage 2. There is a blue dot in the base. Comparatively, technically, fundamentally, the strong stock looks strong. There is no reason to sell. But given the fact that the market is currently struggling, okay, to go up, the market is trying to attempt a rally since last month. Okay, it's been a month that the market is trying to attempt a rally, and it's not even halfway through to the top. If you look at the Nifty, have a look at this. So from here till here, the stock did not go even halfway. Just see, this red line represents the halfway distance. So it touched that 50% level. Okay, from here to here, there is a 50% level in the between, which is the red zone. Touches that 50% level, precisely touches that, and then starts to fall. If this low gets broken, okay, I have no prayer for investors and traders. I don't know how much the market can fall. I am not in the business of predicting and forecasting. I am just looking at the chart as it is, and whatever the chart is telling me, okay, I am doing that. For me, it makes sense to just sit on the fence right now and wait while I book my gains. The goal is not to catch the top. So Keynes technology, can it double from here? Of course, it can double, triple, quadruple from here. But do we know that? Nobody knows that. So as long as I am getting the gain, okay. Now, could I have sold at the top here? Well, you can't catch the top. How do you know that that is the top? Okay. So you look for signs. You look for signs on the chart which show weakness, and then you get out accordingly. Another question is, why did I not sell on Friday? Why did I wait till Monday? Because I wanted the time to sit on a weekend and do an objective analysis of the market, of the stock, look at technicals, look at moving averages, look at price, look at volume action, look at comparative technical fundamental factors, market factors, and based on everything, take a decision as to what do I want to do for the next week. Okay. So considering all of this information, see, trade management, selling a stock is a subjective decision. Okay. I could be wrong in selling this stock. I don't know. Instead of selling all of my position, I could have sold half of my position there. So why did I sell all? Because I don't know whether the market is actually going to go into a confirmed uptrend or it will undercut the low. Okay, so I'm getting mixed signals from the market. If I'm getting mixed signals from the market, it is better to sit on the fence. While buying, also the market was in a rally attempt, but I could see comparative strength, I could see technical strength, I could see fundamental strength. I could see the blue dot. That means the stock was doing better than the market at that moment in time. Okay. So buying is okay. But when it comes to selling, when you are already at a gain, it doesn't make sense to give back that gain, even though this is a positional trade. Positional trade means you're not supposed to sell the stock as long as it is above the 50-day simple moving average. Even though this is a positional trade, I ended up booking my profits because if it creates the next base, I might get in again because these numbers are not going to change overnight, right? So I'm waiting for that next opportunity. Meanwhile, I want to book my profit. So I might trade the same stock multiple times as it during its stage 2 journey. My entire goal is to reduce or control my risk. So those are the reasons why I ended up selling the stock. So I sold at 7193.40, bought at 6108.40, 17.76% gain in about 2 to 3 weeks. That's decent. I can use that money to finance my future trades. I can use that money to take a higher position size on my future trades, especially by that time if the market comes into a confirmed uptrend. Now, if the market undercuts the recent low and actually goes into a downtrend, selling this stock and selling Dixon was, in my view, the perfect decision that I could have taken because I have sold out the entire position in both the stocks. Okay. So that's my analysis. So as you can see, the analysis is very subjective. Okay. It is very judgmental. Okay. So you have to exercise your judgment. But overall, the framework remains the same. I look at comparatives, I look at fundamentals, I look at technicals, I look at market analysis, and then I look at the chart of the stock and the chart of the general market index. I look at price, I look at volume, and based on all of this, I take a decision. And once I take a decision, then I don't back down. Then I don't sit there watching the stock. Okay, the stock has doubled after I sold, so I have a regret now. No, I don't get into all of that. Based on what I see currently, I take a decision, stick to that decision, and move on to filtering stocks. 99% of my time is spent in screening for stocks, looking for the next best opportunity. Okay. Thank you so much.